Welcome back, and my apologies. I am coming at you very late in the afternoon on Friday, July 26th, 2024. I just had to knock out a quick little 18 holes, and it is now 9 p.m. before I'm finally getting to this video to provide you Friday's update for financial news. We have a little bit more economic data. Indexes today were largely mixed. Not really going in any particular direction, a little bit sideways, a little bit up, nothing particularly special. We had 3M report their earnings today, and they are up 22% on their news, just absolutely blew it out of the park. So while there are some companies that are reporting mixed earnings, we do have companies that are reporting great earnings. And I think that's a testament to possibly the fact that some of these companies might be trying to force the Fed's hand here and get interest rates to come back down, even though they've been doing stock buybacks, even though they've been spending all their spare cash. There are still companies out there that are performing well in these tightening economic conditions. So potentially there's more tightening to still come. I think everybody, at least speculators, have largely abandoned the idea of interest rates being lowered now for the upcoming July meeting, and we will just need to look forward to the September meeting to reevaluate. And there will be plenty of economic data coming out in between now and then for us to further kind of break down and analyze and determine if that will actually happen in September or not. Now, again, quite frankly, I don't think it's going to end up happening, but it's going to take a little while, and it's going to take some more confirming data before everybody changes their mind and that expectation, or at least the bet of that expectation, starts to come back down. Now, if interest rates do start to come down, let's look forward a little bit towards that. And just thinking out loud here, what we might be able to start expecting, well, let's keep it simple. So if interest rates start coming down, we're going to be looking at lower high yield interest rate savings accounts. We're going to be looking at potentially, maybe not immediately, but potentially lower mortgages, upwards of 0.5% to maybe even a full percent within the following months. And if we continue to lower interest rates, then we may even get lower mortgages than that. Now, I believe current mortgages are sitting around high sixes, very high sixes, very low sevens, about maybe 6.9, 7.1%. I can't remember the exact number. But if we do start to get interest rate lowering from 5.5 down to 5.25, 5.0, 4.75, a bit of a stretch, then we might see mortgages come all the way down to low sixes, high fives. And will that result in a spike in home sales? Will that result in a spike in home prices? That is still to be determined. I think it might possibly result in that, and not because that's an attractive level to get in at, but because people are dying to get into either their first time home buying experience, or they're trying to maybe perhaps move from where they were and they feel like they got a little bit of a mortgage interest rate locked into the current household that they're in, and they're wanting to move somewhere else, but they're not willing to do so at these rates, but they're willing to do so at a slightly lower rate. We will just have to see. I'm slightly concerned that the lowering of interest rates at the incorrect moment, and this is why I think it's so important for Jerome Powell to time this correctly, because if he lowers them at the incorrect moment, I worry it will cause a whole new wave of buying, not just in home sales, but in the auto market, in the retail market, in the luxury markets, and just the consumer spending overall, which is still maintaining a pretty good status quo as it is. If we see a significant spike up in that, that could be what very well pauses the slowdown of inflation, and best case scenario causes it to go stagnant, but worst case scenario causes inflation to tick back upwards. And I tell you, the moment we see inflation tick 0.1% back in the opposite direction from where the Federal Reserve is expecting it to go, and especially if they're lowering interest rates than from where they're intending it to go, there will not be a positive reaction to that. And I have stated this before many videos ago, but it's worth reiterating that I don't think that fear in the markets will stem from lowering interest rates alone. Lowering interest rates are not inherently bearish to markets, right? Just because the economy is doing well, it's performing well, and the Federal Reserve is saying, well, we're going to lower interest rates a little bit and take a little bit of the braking power off this moving train, that doesn't mean that markets are now in damage control and everything's not going great. That can mean a number of different scenarios related to the US dollar, related to the asset balance sheet that the Federal Reserve maintains. It can relate to the housing market. It can relate to the situation that banks are experiencing. It can relate to a number of different things. Now, if the Federal Reserve is just wanting to lower interest rates to try to slow down the decrease in deflation, or I suppose inflation, slow down the decrease in inflation, then it could still benefit the economy. So I don't think that lowering interest rates are inherently bearish. But what will be bearish is if the Federal Reserve says we're going to lower interest rates by 0.25% and we expect to do so 3 times in a row, or we're going to lower it by 0.5% this time, and then we're going to do another 0.25% possibly in the near future, and another 0.2, whatever. If they lay out a guideline of what they expect to be doing in the near future, we need to stick to that. Now, if we start lowering interest rates and then before long the Federal Reserve says, well, we're going to lower another 0.25%, and then another 0.25%. And then another month comes and we lower another 0.25%. It starts to reveal the fact that the Federal Reserve may not have as much control on the situation as they're claiming to have. And if keeping rates higher for longer had the effect that they intend it to have, which I believe it is taking place right now, then if it becomes too dramatic and they didn't time it correctly, then we will see them having the need to lower interest rates beyond their expectation. And that's where the uncertainty, that's where the panic is going to come from, is, hold on, the Federal Reserve said they were only going to be lowering interest rates 0.75%, 0.5% over 6 months or whatever, and now suddenly they're lowering it at 0.25% a meeting consistently over and over with no clear language regarding when they intend to stop that lowering. That's going to indicate that the economy is actually in trouble, and the Federal Reserve is trying to remove as much of that weight, as much of that braking pressure from the vehicle that is the economy as possible to try to get it back balanced in the right direction. And that's where that panic will come from. So we will just have to see, because like I said, I'm a little bit concerned that once we start lowering interest rates, it's going to inhibit a whole new level of buying interest and demand. And so I think it's not just important that the Federal Reserve maintains higher for longer, even though the expectations are that they're going to start lowering interest rates in September or whatever, but that they also maintain higher for longer under the potential possibility of there being a whole new buying spree the moment that they do start lowering. So that's all got to be calculated in there. I can't wait until Wednesday, this upcoming week on the 31st, to see what type of language the Federal Reserve releases and says regarding interest rates and the state of inflation, And in between the end of this month, July 31st, and the September 15th, 16th meeting or whatnot, that's a whole month and a half more of economic data to still come out. So a lot can change in between now and then, but just based on the recent economic data that we got, it shows that not only is the economy primed for higher rates for longer, but I think it may hint at the message that the Fed has, I think, also been alluding to, that they're not ready to lower interest rates just yet. And I don't think we will get a clear indication of when they are necessarily, but they don't want to be tipping off the market per se. I think they want to keep that pretty on the down low, but we will have to stay tuned for that. So hope you all have a great weekend. Not much going on Friday in terms of market action. It was a bit of just a relief bounce in indexes today, aside from the few good company earnings that we saw, especially 3M. They really blew it out of the park. So yes, I will be back on Monday post market close. Thank you so much for watching. Please consider liking and subscribing, and I will see you all then.